What's up, everyone? Welcome back to the trading world. I have to be a little quieter today because I am on the family reunion and there are people around doing things, but I still wanted to make a market recap for you guys for today, cover trades that you could have taken on Twitter, as well as the price action for the day in general, because today had amazing price action. And anyway, let's jump right into it. So, starting out on the higher time frame, we actually have this really nicely placed 4-hour gap in discount of this range from low to high. You can see how perfectly we respect that, and you can see I have this framed as a model where we get this 15-minute change in state of delivery, and look at how orders get filled here and here and here, and then we go expand up to these low resistance highs. You see how this is a buy model, right? So with this in mind, going into the day, we had been pushing into this change in state, and this happens overnight during Asia and London. And we had essentially one of the most textbook daily profiles we've had in a while. It was simply a London pushes into a higher time frame key level day, and we expand the opposite direction. So London reversal, New York continuation. Basically, all you need to know is London pushes into a key level, and then after London pushes into a key level, we know New York has a really high probability to keep going in that same direction. So to show you what I mean, here is this shown out right here. We have London sweeps out Asia's lows, so you could have that on it. That on its own is significant, but we push into this rejection block here. But the main thing is we sweep Asia's lows, right? We sweep Asia's lows, and we end up getting S&T. Let's see if I have an image of this, because I think that would make things easier. I don't think I do. So, here we go. So yeah, we end up, so all of this, we're moving sideways. We get SMT with Asia's lows, and we sweep out Asia's lows. Then we get a really clear break of structure. Also, by the way, we dip below our key time for the day, which is midnight. If we go below midnight into a key level, that's often a good sign that was the manipulation. So we push below midnight, sweeping out Asia's lows with S&T with Asia. We break this high, and this fair value gap is a 2022 gap, and we go expand to go take out those low resistance highs. So very, very clean price action. So from here, we break structure. We had trades from a few different people. First, we have this one from Ash Trades, where it's that same exact thing. During London, we break this high, making this a valid breaker block, where it's a low, high, lower low that takes liquidity, and then higher high. It overlaps with the fair value gap, so breaker and fair value gap, and then stop loss goes at the low, and we expand higher. Personally, I don't take breakers. Because all breakers and fair value gaps are going to overlap with a flow state entry. If it's a good breaker and fair value gap, it's always actually going to align with flow state. So for instance, we sweep out Asia. We had this 4-hour key level, this rejection block. And then, so sweep out Asia with S&T. And then so we have this 15-minute change in state right here. we get this candle body close above this old green candle, so 15-minute change in state, and then you can see the rest is history. If I measure out these standard deviations, second hits perfectly, and then fourth hits, and the fourth lines up right at this low resistance liquidity. So the way you would take this is 4-hour rejection block. Oh, we also had S&T with this low, forgot about that. So S&T with this low, 15-minute change in state off of this 4-hour rejection block, and then we retest that. So this is the same trade that I talked about before, but just seen in a different light, where we expand up to go run these low resistance highs here. So then the trade of the day that was probably the best trade of the day, that I wish I caught, but I was not on the charts yet. This happened before I got on the charts, was this inversion here on the 3-minute, where we have this old gap, and it's just clear, very clear accumulation, manipulation below these lows, and then distribution. And here you can see this trade. We also had SMT with this low, making this higher probability, but essentially we have this old fair value gap where you have a gap between this candle and this candle, this wick here, and then this high of this candle body. That gap we get closed above, and then we run up to previous day's high. We run up to previous day's high, stop loss just in this general vicinity at the low of this body, and then we continue higher to continue to go run up that low resistance, those low resistance highs, and then yeah, you can see this also ends up being a 2022 model, because we sweep out these lows, we break this high, we have this this is also a 3-minute 2022 model. You can see how we respect this fair value gap after we get a sweep and then a break of structure. 3-minute gap gets respected, we expand higher, and then we also have this as a 1-minute 2022 model, where same thing, accumulation, sweep of the low, break of the high, retest of that 1-minute fair value gap, and then we aggressively expand up to our drawn liquidity, which was previous week's high, and so the market aggressively expands up there. So yeah, and then as well, oh, here's that same trade. This was the flow state trade, 4-hour rejection block. This looks a lot cleaner actually. 4-hour rejection block, we sweep out Asia's lows with SMT, dip below midnight, confirming this as manipulation for the day, and then we continue up and expand to that 4 to 4.25. So I would enter on that 15-minute retest of that change in state of delivery, and then we expand to go run all of these low resistance highs. And then another thing to note is we have another 2022 model later on where we sweep the low, we break this high, and then this fair value gap supports price to go higher. And the cool thing about all of these gaps is these gaps are higher probability, so you can go in the lower time frame, and so we have this 15-minute gap. We can use that as our higher time frame key level for a lower time frame flow state. So we have a 15-minute gap that was part of that 2022 model. We sweep out the low, 1-minute change in state, enter on that retest. You can see orders get filled here, and then we expand up to that 4 to 4.25 perfectly before retracing back down. So on the higher time frame, this essentially completes our higher time frame buy model. We had the weekly gap and 4-hour change in state going up to that 2 to 2.25. And yeah, I think the last thing I want to say is there's more. I have to cover trades from people. So Johnny takes this short. We have sweep of previous week's high, change in state, It's hard because there's not exactly a key level to use up here, but I liked this as a 1 minute change in state. I guess he uses this as a 5 minute change in state, and he enters on the retest. I like this as a 1 minute change in state a little better, but it's the same exact thing. But there wasn't a higher time from key level, so I guess he was just going off the fact that we swept previous week's high. And then this, there's not really much liquidity in here. This isn't technically a liquidity void because in order to have a liquidity void, there has to be literally an actual gap between the open and close of a candle. But this is basically going to act like a liquidity void because there's not really many buyers and sellers in here. So we quickly move higher, which means that the range where we want to take people out is still all the way down here. So we're going to want to fill this, and you can see that we end up filling this aggressively, going back lower. And T-Trades talks about how this closes at 10 a.m. and that's when a 4-hour candle closes. So when a 4-hour candle closes, a lot of the time, that's a sign that we could get a reversal because the next candle is going to form. So basically the 4-hour candle closes, and so he's looking at, okay, are we going to manipulate those highs? Yes, we did. So we manipulate those highs. Basically this is 10 a.m. power of 3, right? Where once that 4-hour candle closes, you're just looking for which way are we going to manipulate after 10. You can see we manipulate up. Okay, so he's like, okay, we manipulated up after 10. So I'm looking to distribute down, and you can see we distribute down to go back to that range. So Hydra tries a short here, and it stopped at break even. Says the pain of discipline. So Teb takes this short. Decent. Very good death candle through this gap, and we aggressively expand lower to go to this range here. And yeah, I do think the trade of the day was this 3-minute long from Dodgy. I wish I was on the charts for this. I would have loved to take it. And if I was to read you today, I would take this 3-minute 2022 gap right when I got on the charts to go run those low resistance highs if I were to redo today. But other than that, I didn't really get a trade. And then because we aggressively expand and there wasn't much opportunity after that. And then what else? Oh yeah, the last thing. If you made it to the end, you get to know this. So I'm gonna make one video about this and only one, and then I'm probably not gonna talk about it anymore because I respect the fact that it is actually Enigma. But essentially, Enigma played out really well today. This is the real ICT Enigma. And if you made it to the end of this video, you get to know about it. But I'm only going to make one short form video about it and then never talk about it again, probably. But basically, it's going to give you a range where the market maker model is likely to form. So we have, at the low of the range, we sweep out edges lows with SMT. And then each of these lines represents an area where your PD arrays are going to form, so your key levels. And so this one right here is the fair value gap zone. So the fair value gap should, for the 2022 model, should ideally form in this zone, making this higher probability. We tap into it once, twice, 3 times, orders get filled, and then we expand to the opposite side of the dealing range, aligned with these low resistance highs. So Enigma played out very, very well today. And if you made it to the end of this video, you get to know that if you want this indicator on your chart, it's DMD's AMD gold block. Just type in gold block levels. But yeah, hopefully you enjoyed this video, found it helpful. If you made it to the end, comment gold block. And yeah, I'll see you guys later. Peace out.